Tuesday, September 20th, 2016, Monaco 64, home of alternative economics and contrarian views. I'd just like to talk about the central banks. Tomorrow we've got the Bank of Japan meeting and also the Federal Reserve. They're meeting today, but they end their meeting tomorrow. I think actually the Bank of Japan, the result of that meeting could be more important than actually the FOMC's decision or the Fed's meeting. They started their meeting today as well because the time difference when they end their meeting tomorrow, it's going to be around 11 to midnight New York time today. So yeah, there will be an announcement around that time. London time, it's between 4 and 5. And then later on, there will be a press conference by the Bank of Japan Governor Kuroda. And the last time, well, basically, why I think it's going to be important, the Bank of Japan meeting, is because of something called Abenomics. And I'll read here a little bit about Abenomics for those of you who are not familiar. And I quote Wikipedia. It says, Abenomics refers to the economic policies advocated by Shinzo Abe, the Japanese Prime Minister, since the December 2012 general election, which elected Abe to his second term as Prime Minister of Japan. Abenomics is based on 3 arrows of fiscal stimulus, monetary easing, and structural reforms. So now I want you to show you a chart, because at the time, end of 2012, throughout, since 2011, 2012, as you can see the chart here, that's a chart of the dollar versus the yen. That's how many yen the dollar buys. And we dropped to like historic lows, the dollar did against the yen, below 80. And what that did is that really hurt the Japanese economy. They needed, their export-driven economy. They needed to do something to, try to get the economy going. Of course, their economy has been in a quagmire since the early 90s. So Abenomics, as you can see, the effect of it, they started doing, buying even more, doing more money printing, fiscal stimulus as well, which is government spending, and structural reforms. And you can see that the dollar started rising, from around 80, just above 80, but let's say 80 for all intents and purposes, on average in 2012, all the way up to around 125 by the middle of last year. So that was the devaluation of the yen. That was like a part of the currency war. I guess you have to flip this chart upside down to see the drop in the yen. So this is the rise in the dollar. And if you think about it, that was the period when a lot of the risk assets did well, and things like gold didn't do well. The stock market went up. We topped last year. A lot of the world stock markets topped in 2015, right about the time when the dollar topped against the yen, or the yen bottomed against the dollar. I know we've made new highs this year, but as you can see, the chart, since the middle of last year, the dollar has been dropping against the yen. The yen has been rising. And I've got marked here, Bank of Japan shock. That was in the end of January, when unexpectedly the Bank of Japan, seeing that the rise in the dollar was stalling, what they did was shock the markets at their meeting, Bank of Japan meeting at the end of January. They cut rates to negative 10 basis points. First time they had negative rates, and they announced massive QE. And despite that, the yen has continued to appreciate, or the dollar has continued to drop. And we were around 120. $1 was buying 120 yen at the time, and now we're around 102, and we've even gotten below 100 yen recently. So why is this important? Well, because there's a term called the yen carry trade. And I did a video, I think it was April, beginning of April this year, saying strengthening yen pointing to market turmoil. I'll put it up in the card above. You can have a look at it. And I explain how the yen is used as a carry trade. And basically what that means is that investors will borrow in yen because, the cost of borrowing yen is very cheap, 0 or negative. And since 2013, the trend in the yen has been going down. So if you borrow in a currency that's going down and you buy risk assets that are going up, that's a win-win. But that has kind of turned around now. In my opinion, that's because a lot of other countries are cutting their rates to 0 or negative. So the yen is not the most important carry trade. But Japanese investors are huge. They're big savers. And they need, the Bank of Japan, they need the yen to resume its drop against the dollar. And that would also encourage Japanese investors to go outside of Japan and start buying foreign assets or risk assets. So that's why it's important. I personally think the Bank of Japan is really in a corner. They haven't done anything since the end of January because it hasn't worked. So, they're not really sure how effective their policy is anymore. The market expectation is that they might cut the negative rate maybe a little lower to negative 15 basis points from negative 10 basis points, which means negative 0.1%. The expectation they'll cut it to negative 0.15. In terms of increasing the amount of QE, it looks like the market is not expecting anything. So it will be really important. And, the last time they shocked the market with a lot of accommodation in the end of January, the yen actually has been going up since then. So they're kind of in a difficult situation. So the important thing to look at the Bank of Japan is what they do and how the yen reacts. So if the dollar drops below 100 yen, meaning the yen goes up, that will hurt risk assets all over the world. It could increase volatility all around. As for the Fed, they're coming out at 2 p.m. New York time. That's when they announce, their decision. It looks like the expectation is that, there's a 22% chance that they will hike by 25 basis points. So not a very big chance, not a very big possibility that they will hike. Today, there was a guy from the Wall Street Journal, Hilsenrath. He's supposedly the mouthpiece of the Fed. Whatever he says is pretty much what the Fed's going to do. He said the Fed won't hike tomorrow and that they will probably hike in December. And then at 2:30 New York time, we have Yellen's press conference where she'll, give a complete rundown of what they think about the economy. And the markets will be focusing on that. Today, the markets have been fairly subdued. The Dow is up a little bit, up 45 points, not much. Gold is still stuck between 1312, 1318. That 1318 level I was talking about yesterday, that seems to be a level gold's been capped at. Silver still trying to get above that 1920-22 level. We're at 1920 right now. So so that is the big, those are the two big events overnight and tomorrow. Bank of Japan, and FOMC. So it's like a super Wednesday of central banks. I wish I didn't have to talk about central banks, but they, unfortunately, they are important for the markets at this point in time. Ideally, we wouldn't have central banks and markets would be free and set the price of money, which is interest rates. So if you enjoy my video, please like, share, and subscribe. And if you'd like to donate to my channel, there's a few links below. You can donate in Bitcoin. I'm accepting Ethereum now as well, Ether. You can donate through PayPal and Patreon. Thanks for watching. Bye.